Market under pressure for the second day, but frontline indices are sharply off the lows. Nifty recovers 200 points from the morning lows. Nifty Bank recovers 500 points and HDFC Bank sees another 2% cut, while Asian Paints too falls 2% after reporting their Q3 results.
Oracle Financial rallies 18% as revenue surges 26% over Q2, along with strong margin expansion. LTIMindtree slumps 11% as the company misses the mark in Q2 and also pushes out its margin guidance by a few quarters. ICICI Pru Life falls 6% as higher share of ULIPs hits margins in Q3.
India will see 14% growth in steel demand this year, but cheap steel imports coming at predatory pricing are a concern, says JSW Steel's joint MD and CEO Jayant Acharya. Tells Shirin Bhan that the industry needs government intervention to tackle Chinese steel imports.
BFSI and retail are bottoming out. Next year should be better. TCS CEO K. Krithivasan talks about the IT outlook at Davos, says he wants to get the engineering culture back at TCS. Cognizant CEO Ravi Kumar also discusses the recent controversies over former Wipro employee Jatin Dalal joining the company.
The Roads Ministry expects to float tenders for 10,000 kilometers before March 31st. Secretary Anurag Jain tells CNBC TV 18 and adds that tendering was slow in the first 9 months because the ministry was improving the contracts to make them arbitration-free. Hello and welcome to Business Lunch. I'm Nisha Podar. As always, with me is my co-anchor Pavitra Parekh. So, Pavitra, yesterday's weakness and today the weakness really persists in the market. Yeah. And some of the results have really spooked the market, which continue to weaken the market even today. So that's the big theme of the day today. Let's take stock of the lunch hour market rates at the moment, over 0.5% down. When we talk about Nifty 50, so 21,500 level has been lost for Nifty 50 at the moment, trading below that. Sensex 2 has lost about 363 points at the moment. Bank Nifty is underperforming the key indices, 0.8% almost down in trade, and mid-caps too over 0.5%. So overall, there is weakness in all the pockets that we see. Advanced decline ratios, no surprises because of the broader markets also weakening along with the frontline indices. Well, definitely more towards the declines and declining stocks are ahead. And that crisscross has really taken place. But still on my screens, some of the counters which are still holding up in the green from Nifty 50 are the companies like Sun Pharma, Tech Mahindra, M&M, Axis Bank, Tata Motors. Pavitra.
So like you said, the weakness persists, but it's been quite a shaky session, right? We did see quite a recovery at one point. Once again, you're seeing a dip come through. At one point, the Nifty Bank had moved into the green. You had the mid-cap index, which had moved into the green as well. On the banks, there was a 700-point recovery, but once again, you're seeing quite a fall come through right now. I do want to point out that some are still holding up, a lot better than others. So names like SBI, Axis, right now doing a lot better than the rest. A lot of the smaller PSU banks are also holding up well. And like Nisha was pointing out, a lot of the pharma stocks, a lot of money moving into the defensives. Names like Sun, Apollo Hospitals, Cipla, all of these holding up in what is looking like quite a weak market. There's also a lot of earnings reactions coming through and very severe, right? The market is not willing to forgive the misses. So LTIMindtree is down, but it's also rewarding the ones that have done very well. So something like an Oracle Financial is up 18% or so. So that is interesting to see. And the entire real estate pack, once again, up and about in trades. So names like Sobha, DB Realty, you had Macrotech on your screen a while ago. All of those seeing pretty good cues coming through right now in terms of the stock moves. That is what's happening with the market. We'll come back to this, but let's talk about some of the IT companies which are in focus on the back of Q3 result reactions. Like I was telling you, Oracle is up and it's surging around 20% on the back of a very strong showing in the third quarter. This is something that we've been talking about. But on the other hand, LTIMindtree has seen a sharp sell-off because both the revenue and margins have missed street estimates. So Rima is here to break down both of those numbers for us. Rima.
It's really a tale of two cities in these two mid-cap IT names. Now, LTIMindtree used to be an investor favorite. The company has been reporting very strong growth for the last couple of quarters, but this time it's disappointed. And on the other hand, you've got Oracle Financial Services, which has been a bit of a sleeper company. The numbers have been sluggish. The stock price has been compounding at a CAGR of just 5%, 5-7% for the last 10 years. And this quarter, it's been a blowout performance. So let me quickly run you through the two numbers. Starting with LTIMindtree, revenues and margins were a miss compared to street expectations. The company said the key reason is the furloughs were more than what they were anticipating, and that was a negative surprise. They saw furloughs even in sectors like energy and utilities, which typically does not see furloughs. Secondly, the company also said that Q4 will be similar to Q3, which means no recovery as of now. Recovery will be very gradual. Also, the company has pushed forward its margin guidance of 17 to 18% out by a couple of quarters. So it's now going to be achieved in the medium term. Valuations are also fairly expensive, trading at 32 times forward multiple, more expensive than large cap peers like TCS. And you've got brokerages like CLSA downgrading LTIMindtree after the miss in Q3. Oracle, on the other hand, as I said, after many sluggish quarters, this quarter it's been a blowout performance. Revenue growth 26% quarter on quarter and on a year-on-year basis. The key driver has been the strong license fee signings. License fee signings have come in at nearly $50 million this quarter, and if I look at the 9-month license fee signings, it's up 76% compared to the same time last year, and this is driving a big beat in the company's margins at nearly 48%.
All right. Thanks so much, Rima, for all those exhaustive details on the mid-cap IT. Moving on then, the logistics space in India has seen quite a lot of consolidation in the recent past. In fact, the top players have been aggressive in adding capacity to gain market share. Sources indicate another large acquisition may be in the offing in this space. And Vivek, our colleague, is here to tell us more. Tell us, Vivek.
Well, good afternoon. So, what we are picking up from our sources that within the logistics space, remember, recently listed JSW Infra is the company that we're talking about. They're looking to acquire Navkar Corporation. Even as we speak, we understand that at this point of time, due diligence is going on from JSW Group's end on all of the assets of Navkar Corporation. We also understand that at this stage, the due diligence is at an advanced stage, and JSW is on the verge of making a final offer to acquire Navkar Corporation. Remember, the promoter and promoter group hold over 70% stake in the company. Any deal, that requires a management control change will trigger the open offer. So Navkar Corp shareholders, in case there is an open offer does come through, they will be able to tender their shares over there. We reached out to both the management of JSW Infra as well as Navkar Corporation. JSW Infra declined to give any comment to our story and to our mail. When we're talking about Navkar Corporation, they did not respond to our queries. What is it that Navkar Corporation has, and how will it aid JSW Infra? Remember, Navkar Corporation owns 3 container freight stations at the gateway port of Navsheva. This is something that will aid JSW Infra. Along with that, the company operates 2 private railway terminals for handling freight trains. Again, this is something that will aid JSW Infra. Remember, JSW Infra has been quite aggressive post-listing in order for to grow ahead in an inorganic manner. They also got a terminal license from Sikkel Logistics. So all of this will help JSW Infra go ahead and meet its aggressive capacity guidance target of handling close to 300 million tons per annum capacity by 2030.
Okay, very interesting. Vivek, thanks a lot for getting us all of those details. But let's now also bring you some voices all the way from Davos. Jayant Acharya joined MD and CEO at JSW Steel, outlined capacity expansion plans, and also spoke on the threat of cheap imports to the steel industry. So listen in to what he had to say.
Typically, during this nation-building phase, as we call it, I think India is going to need a lot of steel. So we are adding domestic capacity, JSW, as a part of the national steel vision to reach 300 million ton of capacity. We would like to be at about 50 million ton by 2030. Our plans are more or less on track.
Okay, so you gave us a 2030 outlook, and you also talked about the brownfield expansion. So say by 2025, in terms of the incremental capacity that comes on stream, what could it look like?
So JSW Steel today is about 30 million tons worldwide. Out of that, 28 million plus is in India. We expect to be about 35 million ton by FY25. And the international piece stays at about 2 million odd.
What's the outlook then in terms of prices and through 2024, given the supply and demand at this point in time, as well as the implications of what happens in China, whether we see a recovery that takes shape or it's going to be slower than expected? What could it do to global steel demand and pricing?
So from a supply-demand perspective, I think as you mentioned, China did have a slowdown because of the property sector. But the rest of the sectors in China have done quite well, surprisingly so. And I think they have taken various initiatives to stabilize the economy. So we are seeing the steel production by and large at a similar level as last year, and the steel consumption at a similar level as last year. But the exports from China have gone up, and that is a concern. And the supply, therefore, into the world has increased. So we feel on a supply demand in the medium term, it should be good. On the shorter term, I think we need to be cautious in India because India is growing. We should be wary of any unfair trade which comes into India at low prices, which would hurt us.
Well, that I think the government is always watchful for, and mechanisms are in place to impose duties as and when the government believes there to be a case. Is there a case at this point in time?
There is a case growing because I think today India is a net importer in this year of steel, which is not a good thing. And what is worrisome is that some of the cheap imports are coming into India at prices which are predatory, and that is our concern. If it's fair trade, we are good to go. If it's prices which are below at times their domestic prices or at a loss, then it's a concern.
Have you taken this up with the government recently?
Yeah, we are in discussion with the government in terms of
any
steps
specific
which
products
should be taken. It is actually across various product lines, but mostly in the flat steel space.
All right, so that's the word coming in from JSW Steel. And on that note, we'll slip into a short breather on the show. But remember, the union budget is less than just 15 days away. And what is your wish list for the finance minister this time? Presenting the CNBC TV18 budget ballot box, coming to a hotspot right near you. We will be placing these ballot boxes at popular public spots like malls, colleges, theatres and others across major cities in India. We will also be asking the newsmakers who drop into our studios for their budget wish list. So come join us and tell us what is your top budget wish list for the finance minister. Drop your wish list at a CNBC TV18 budget ballot box near you. We will compile them and present it to the finance minister before she presents the Union Budget 2024.
Welcome back. Let's talk about the auto space now, because Tata Motors has really ramped up its electric play, with the Punch EV becoming the only automaker now to provide a car with 420-kilometer range. Speaking to CNBC TV18, the company's managing director Shailesh Chandra strongly advised against tax concessions on hybrid cars and advocated a level playing field for all players in the industry. Listen in.
We have seen that based on our experience from the past launches, it is also a factor of what is the state of charging infra. Typically, we see that the demand settles at around anywhere between 15 to 20% of what volumes we are selling in that particular product line. And therefore, it should be about 20% is what I would imagine as a steady state. Demand settling down for Punch also, while the PV industry in general will grow in single digit. Electric vehicle industry can still grow by about 40% plus, and that's the kind of growth rate we would also be targeting. Asking for any differential treatment in terms of incentives and all is completely not required because it is primarily a fossil fuel based technology, and therefore it should get the same treatment as what a GDI would get or a CNG would get. So frankly, I don't see a reason why there should be any digression from what already government had very well concluded few years back. From our side, as local manufacturer, the ask would be that competition in the country and for the consumers, it is always good. But every player needs to play on the same level playing field, and nobody should ask for anything extraordinary. Neither we should ask, nor anybody else should ask for a different set of benefits that what rest of the industry players are competing in the same market.
All right, staying with the mobility space, well, the aviation regulator has imposed penalties worth about 2.7 crore rupees on Indigo, Air India, SpiceJet and the Mumbai airport for violating the various safety regulations, including also allowing the passengers to alight and wait on the apron. In fact, our colleague Danish has been tracking the developments very, very closely, gets us all the latest details. Danish.
Well, Indian Aviation Regulator DGCA and Aviation Security Regulator BCAS have imposed penalties worth rupees 2.70 crore rupees on Air India, Indigo, SpiceJet and Mumbai International Airport. The biggest penalty has been imposed by BCAS on Indigo worth rupees 1.20 crore rupees for violation of 5 different aircraft security rules, and this is related to the incident we saw a few days back in which a connecting Indigo flight was diverted to the Mumbai International Airport and the passengers were made to wait on the tarmac and they were also served food over there. Similarly, BCAS has also fined Mumbai International Airport 60 lakh rupees for breaching various aircraft security rules 2023, and DGCA has also hauled up Mumbai International Airport by fining them 30 lakh rupees, and this is also related to this very same incident. And the biggest reason why Indigo and Mumbai International Airport have been fined such huge amounts is the fact that they did not inform BCAS well in advance, and they were only informed about this after the video went viral on social media. On the other hand, Air India and SpiceJet have been fined 30 lakh rupees each by DGCA for not following the government regulations on ensuring proper rostering of Cat 3 trained pilots for the fog and adverse weather conditions in the northern part of the country. So all in all, if we see, the regulators have imposed the biggest fines in the history of Indian aviation worth rupees 2.70 crore rupees.
All right, that is the news flow coming out of the aviation space. We will keep bringing you updates on that front. But for now, it is time for a short break. On the other side, we're going to bring you some very interesting updates. Stay with us. We'll be back in 2.
Welcome back. You're watching Business Lunch, and let's get started with a CNBC exclusive. Well, GQG Partners, remember, that firm's Rajiv Jain remains bullish on India and also sees immense potential in the India infrastructure space. Now, they continue to like the Adani group of companies and are optimistic about the stake increase in the ITC. Listen in.
We are pretty full, so I don't know, we'll double down further because we doubled down on Adani in May and June, and then we maybe triple down in August. So I think we're pretty full. So I don't know whether we'll go further from here because the numbers are actually bigger than what you're stating in terms of our investment and the profits. Yeah, so our profits are running just under 4 billion or thereabouts in the whole investment. So ITC we owned for 2 years, by the way. So we've added a little bit last quarter. ITC we started buying almost 2.5 years ago. So that's not a new position. But that's still reasonably valued, good volume growth story. The FMCG side of ITC has come to fruition. The hotel side should continue to do well as they spin that off. So at 23 odd times earnings, we feel that's extremely attractively valued versus, Unilever, for example, 50 times plus earnings. And this is a business that will grow at close to, 14, 15%. Upside is earnings growth. So if earnings growth is low double digit in local terms, we feel that's the return is going to be. We probably would not get multiple expansion. So I agree, multiple expansion wouldn't happen. But I think the earnings growth, if it's low double digits, and I think you will see in bunch of them, earnings growth could be quite significant.
All right, that is the word coming in from Rajiv Jain, and you can catch snippets of this exclusive conversation all through the day right here on CNBC TV 18. Let's move on now and also bring you some important global updates. Tensions continue to heat up in West Asia. Following Iran's missile strikes in its border regions, Pakistan has now retaliated and hit back with airstrikes of their own. So Parikshit is here with the details. Parikshit, what is the latest that we have on this?
The situation in India's neighborhood is clearly worsening. Pakistan has now carried out a retaliatory strike on terror groups on Iranian soil. This after Iran carried out rocket attacks on certain Baloch terror groups on the Iran-Pakistan border on the Pakistani side. Pakistan has taken this very seriously. It had said that it has a right to respond, and this is absolutely condemnable. In a statement, after carrying out these attacks on terror groups on Iranian soil, Pakistan had said that it had every right to defend its sovereignty. Let's see how things pan out from here onwards. Tehran has sought an immediate explanation from the Pakistani Foreign Office. India has been monitoring these developments very closely. The Ministry of External Affairs has said that this is a matter internal to Iran and Pakistan, and they wouldn't want to interfere in this. But at the same time, we unequivocally condemn terror in all its forms, and we respect Iran's right to defend itself. So that is a strong statement coming in Iran's favor. Let's see how the situation pans out.
All right. Thanks so much, Parikshit, for getting us all those details on a developing geopolitical situation there. With that, completely out of time on this edition of Business Lunch. But stay tuned. Midcap Radar comes up right next. Thank you so much.